3 million pages of evidence, thousands of unsealed flight logs, millions of data points, names, themes, and timelines connected. You are listening to the Epstein Files, the world's first AI-native investigation into the case that traditional journalism simply could not handle.
Welcome back to the Epstein Files. Last time, we walked through civil lawsuits. Today, we are following Usvili versus JPMorgan through the documentary record so the timeline, decisions, and institutional failures are clear. As always, every document and source we reference is available at epsteinfiles.fm, so start with banking complicity allegations.
Right, that's where the paper trail becomes specific and testable.
Exactly.
We're really moving away from the realm of, let's say, general allegations and into the actual mechanics of the ledger.
The numbers,
the routing codes, the account names. When we look at the documentary record, specifically for the lawsuit the U.S. Virgin Islands brought against JPMorgan Chase, we are looking for one thing.
And what's that?
The financial infrastructure. The pipes that allowed a trafficking operation to function.
You can't run something on that scale with cash stuffed in a mattress.
You absolutely cannot. It needs institutional banking. It requires a global bank to move money, to create legitimacy, to operate.
So let's start with the most basic element. Location. Physical jurisdiction. There's often a defense in these kinds of compliance cases, isn't there?
There is.
Where a financial institution might claim they were dealing with, a generic entity, maybe a shell company with a Delaware registration.
And that they were unaware of the actual on-the-ground location of their clients' operations. Plausible deniability.
So what did the documents tell us about what JPMorgan knew regarding Epstein's physical location?
Well, the document EFTA 000015176 is really the starting point here.
Okay.
And this is an early record, which is significant. It's dated 31/1999. So this goes way back.
Before the public scandals?
Long before. But you have to look at the registration details on the account. The client address is listed as Hook Quarters, #2 St. Thomas, U.S. Virgin Isles is 00802.
Hook, quarters number 2.
Yes.
That is not a P.O. box in a strip mall.
No, it's not anonymous. That is a specific known residential and operational address in St. Thomas. And the document explicitly links this address to a money market fund, JPMorgan Securities, Inc.
So from day one in 1999, the bank has the physical coordinates.
Yeah, the physical coordinates of the client's main base of operations in their system. This establishes the physical jurisdiction of the accounts right from the start.
So the bank wasn't servicing some ghost entity?
No, not at all. They were servicing a specific residence and, operation in St. Thomas.
Which means the argument that the bank was unaware the client was operating out of the Virgin Islands is?
It's contradicted. It's contradicted by their own account registration data from 1999.
That establishes the nexus, as they say, in legal terms.
It does. But, we need to look at the vehicle he was using. An individual account is one thing. For the volume of money we're going to see, you need a corporate vehicle.
Something to provide a layer of separation?
And legitimacy. This brings us to documents EFTA 0018441 and also EFTA 0018466.
And these documents reference the Southern Trust Company?
Yes, and the files are very explicit in their description of Southern Trust Company. It is Mr. Epstein's Virgin Island Incorporated business.
So no ambiguity there?
None. This entity is central to the USVI allegations. In forensic terms, Southern Trust wasn't just some holding company. It was the engine.
The engine for what?
The documents place Southern Trust Company as the primary vehicle for his local operations. Everything flowed through it. And crucially, this entity was banked by major institutions.
Including JPMorgan?
Including JPMorgan.
Okay, so when we say banked, we need to understand the volume. Are we talking about, paying the electric bill for the island, or are we talking about moving serious capital?
We are talking about capital movement. Let's look at document EFTA 0014685.
Okay.
This is a transaction record. It's a ledger. And contains a line item regarding a Jean Brennan.
One of his assistants.
Correct. And the address listed right next to her name is, again, St. Thomas, Thisix. 00802. The same jurisdiction, but look at the figure.
The figure is 5,000.000, $5 million.
$5 million in a single line item.
And there's a code associated with
A
it.
very important one. JPMSDNY.
JPMSDNY. SDNY almost always stands for the Southern District of New York.
And in a banking context, that's exactly what it is. It indicates the routing of the transaction through the New York branch infrastructure.
And this is a critical link.
It is a critical link.
Yeah.
It shows a direct line between the Southern District of New York legal filings, the JPMorgan internal infrastructure, and these high-value transfers moving through the USVI jurisdiction.
You asked if this was about utility bills.
Right.
$5 million in a single line item routed through New York pretty much answers that question.
It's high-level capital flow. The document connects that $5 million figure directly to JPM-SDNY. It establishes the sheer scale of capital moving through these accounts.
And it confirms that the USVI operation, it wasn't some quiet retirement outpost.
No, it was a financial hub. A hub moving millions and millions of dollars and using New York's banking channels to do it.
So let's recap that first block. We've established the location hook, quarters number 2.
Documented in 1999.
We've established the vehicle Southern Trust Company.
His personal Virgin Islands Corporation.
And we've established the volume and the jurisdiction transactions in the millions routed through New York.
The JPM-SDNY footprint.
This creates the entire foundation for the lawsuit, doesn't it? The USVI government alleged that the bank was complicit in the enterprise.
And this is the paper trail they used to prove it.
Which brings us to the resolution of that lawsuit. We know there was a settlement. The figure widely reported, and it's in our director for today, is $75 million.
Correct. And in forensic auditing, a settlement is a data point.
It's not an admission of guilt, legally.
No, but it is a valuation of risk. A company like JPMorgan doesn't pay $75 million unless their own lawyers have calculated that the risk of going to trial is, well, significantly higher.
So we need to look at what that risk looked like to the bank.
Exactly. And for that, we look at document EFTA 000011404 and, more importantly, EFTA 00000020261.
The first document, 11404, that discusses defenses on behalf of state agencies in litigation.
It frames the battle, sets the stage. But it's document 2020-61 where we see the specific liability concern that drove the settlement.
And what was that?
The document cites a legal argument regarding a case called United States v. Morgan. And it discusses the risk, and this is a quote, of exposing a jury to a wider swath of information regarding civil litigation against Epstein.
A wider swath of information. That's a very deliberate phrase.
It is the language of containment. It's lawyer speak for we cannot let the jury hear the victim's stories.
Why not?
Because in civil litigation, if a case goes to trial, the discovery process can become expansive. Evidence regarding prior civil litigation, meaning the lawsuits from the victims, could potentially be introduced.
To show a pattern of behavior, or in the bank's case, a pattern of knowledge.
Precisely. The document shows there was a significant concern inside the bank about a jury seeing this wider swath.
So the settlement, the $75 million, effectively prevented this wider swath from being fully adjudicated in a public trial.
That's the forensic inference, yes. The payment acknowledges the risk inherent in the very documents we are reviewing today.
It's a calculation.
It's a cold calculation. Institutional decision makers assessed the pattern of evidence, specifically the Southern Trust accounts, the internal communications, and they determined a $75 million settlement was preferable to a verdict where that wider swath of information becomes part of the public record.
It effectively acts as a valuation of the compliance gap.
It is. This payment resolves the USVI's claim about the bank's role in facilitating the trafficking operation. It is a financial quantification of the failure to detect or report the activity that we see in the transaction logs.
Okay, so that's the money. Let's move to what the bank actually knew internally. We've discussed the external flows, but the internal knowledge, that's the key to the entire complicity allegation.
It is.
And there's a huge distinction in banking between a standard retail customer and a, quote, private bank client.
A massive distinction. It's night and day. Retail banking is largely automated. You open an account online, you use an app. It's impersonal.
Private banking is a relationship business.
It is. It involves assigned bankers, personalized service, and a much, much higher degree of scrutiny. Or at least it is supposed to.
Which brings us to document EFTA 000020584. This one seems critical.
It is, because this document lists Ghislaine Maxwell right alongside the words JPMorgan Private Bank.
Ghislaine Maxwell.
And look at the date on the document, 29, 2007.
2007. That is right in the middle of the original Florida investigation.
Exactly. This isn't historical. This places the bank's relationship with Maxwell directly, smack in the middle of the period of the criminal investigation and the plea deal negotiations.
And the private bank designation is the key.
It implies a personalized, high-touch relationship. This was not some automated account she opened online. There were human bankers managing this relationship.
At the exact moment she and Epstein were under federal scrutiny.
That is the audit point. A human being at JPMorgan was managing her account while the FBI was building its case.
And it wasn't just, a simple checking account. The relationship seems to have extended into some pretty complex commercial transactions. We have an interview transcript from July 24, 2025, involving Maxwell.
We do. And in that transcript, there's a direct reference to the financing or selling of 9 Highbridge to JPMorgan.
Highbridge Capital, that was a major hedge fund.
A very major hedge fund. And this demonstrates a much deeper commercial entanglement between Epstein and Maxwell's financial interest and the bank itself.
They weren't just depositors.
No, they were effectively business partners in asset financing and real estate transactions. Selling a stake in a fund like Highbridge to the bank, that's a process that involves extensive due diligence.
Meaning the bank would have had to look very deeply into the assets and, more importantly, the partners involved.
You cannot buy a portion of a hedge fund without doing a deep dive into the principles. It's just not done. This suggests the bank had a granular understanding of Epstein's wealth and his business structure.
Far beyond what a teller sees at a window.
Far beyond. This is the C-suite level of banking.
Which brings us to what some might call the smoking gun regarding what they knew about his legal status. Document EFTA 02730486.
This is a heavily redacted document, which is telling in itself. But the header is legible. It's very clear.
What does it say?
It reads, received from JPMorgan Chase regarding redacted. And then the subject line includes the specific phrase, Epstein's non-prosecution deal 6.
Epstein's non-prosecution deal 6. The 6 could refer to the Virgin Islands or maybe version 6 of the deal.
It could, but the key is the phrase non-prosecution deal. The bank was in possession of a document explicitly titled with those words.
This proves the bank was in possession of, or at least communicating about, the specific legal mechanism Epstein used to evade those federal charges.
They knew about the deal.
And from an audit perspective, that is the brightest red flag you can possibly find.
It is. A bank's compliance department is legally required to monitor for adverse media and legal judgments against its clients. Here, we have hard evidence that they not only knew about the legal trouble,
but they had the actual document.
They had the specific document outlining the non-prosecution agreement. And that agreement, as we know, details the nature of the crime sex offenses involving minors.
So, to be perfectly clear, in 2007 or 2008, the bank has an active private bank relationship with Maxwell.
Yes.
They have the complex business history involving Highbridge Capital.
Correct.
And they have a copy of the non-prosecution deal sitting in their files.
All 3 things are true. And yet, as the timeline clearly shows, the business relationship continued for years.
Let's reconstruct that timeline then, strictly from the documents, just to see the continuity.
All right. We have to start in 1999. That's document EFTA 0000151176 again. Yeah. Date stamp 31/1999.
That's the account activity at Hook quarters #2.
That's our baseline. This establishes that they were active clients serviced by JPM Securities well before any of the criminal allegations became public news.
So they were long-standing clients.
Very. Then we jump forward to the conviction era, 2007 and 2008.
Okay.
Here we have document EFTA 00000584, which is dated 2007. That's the one showing the active private bank relationship with Ghislaine Maxwell.
Right in the thick of the Florida investigation.
Right. And then we have the receipt of the non-prosecution deal, which is referenced in EFTA 0273-486.
So the timeline shows the accounts remained active during the plea negotiations and, crucially, after the deal was signed.
That's the point. Despite the non-prosecution deal 6 being drafted, signed, and in their possession, the private bank relationship continued. There is no break in the chain of custody for the money.
The discrepancy is between their compliance obligation,
which would typically demand offboarding a client convicted of, soliciting minors.
And the reality of their own ledger,
which shows continued business as usual. Millions of dollars flowing.
This implies a decision was made. This wasn't just an oversight. Someone, a human being, had to look at that non-prosecution deal and make a decision to keep the accounts open.
That leads us directly to the institutional decisions.
Yeah.
And we actually have documents that give us a glimpse into the legal maneuvering that was happening behind the scenes.
Such as?
Document EFTA 02731082. It's a legal filing, And it mentions counsel representing JPMorgan Deutsche Bank
Together.
in the same filing. They were coordinating.
What does that suggest?
It suggests the institutions were coordinating their legal defenses regarding their shared exposure to Epstein's USVI home. When you see counsel for multiple major banks appearing in the same document, in the same context, it suggests a shared awareness of the liability.
They weren't operating in silos.
No, they were managing a systemic risk together.
And the structure of the business itself, that was facilitated by the bank too, wasn't it? Document EFTA 0000227006 discusses Industrial Integrity LLC, a U.S. Virgin Islands limited liability company.
Industrial Integrity, another one of the shell companies.
The name is ironic.
Extremely. But the document identifies it as a USVI limited liability company. And the forensic point here is that the bank facilitated the operation of these specific LLCs.
How so?
Institutional decisions were made to onboard these entities. You can't just walk in and open an account for Industrial Integrity LLC. The bank has to review its articles of incorporation, its business purpose, and crucially, its beneficial owners.
Which would have led them right back to Jeffrey Epstein.
Exactly. Even if the name on the door is Industrial Integrity, the KYC, the Know Your Customer files, would list Epstein as the ultimate beneficial owner.
So the bank made the institutional decision to onboard these entities despite KYC regulations that require enhanced due diligence for high-risk clients.
That is what the record shows.
We also have document EFTA 00020541, which I found interesting. It mentions the architecture of the lawsuit and summary judgment judicial documents.
This gives us a really clear insight into their defense strategy. The bank's defense was not necessarily that they didn't know he was a client. The mention of architecture of the lawsuit suggests they were planning to litigate the very definition of knowledge.
Not the facts, but the legal interpretation of the facts.
Precisely. The decision was to fight on jurisdictional or procedural grounds. That's why they focused on summary judgment, rather than opening their books to show that they had clean hands.
It's a defensive containment. Don't let it get to a jury trial on the merits.
That's exactly right.
But even with all of this, there are gaps. We're looking at a partial record, heavily redacted in places. What do the documents not show?
Well, the redactions obscure the specific decision makers, the individual accountability. Document EFTA 2730741 is a prime example of this.
What is that one?
It's titled Report Received from JPMorgan Chase Regarding TOVA.
TOVA, T-O-V-A.
Yes. And the document connects St. James Island, USVI, to this report.
So the island itself.
The island? But the content is completely opaque. Who or what is TOVA in this context? Is it a person? Is it a code name for a project? A system? We don't know. The document connects the island directly to this entity or person, but we don't have the unredacted file to confirm the identity.
It's a loose thread.
A very significant one. And then we go back to the non-prosecution deal document.
EFTA 0273048 again.
Right. The subject line about the deal contains redacted names. And this is the crucial forensic gap.
Explain that.
We have documentation of the bank discussing the plea deal. We see the receipt. What we do not have is the documentation of who at the bank authorized the retention of the client after reviewing that deal.
So we see the what? The receipt of the deal.
Yes.
We just don't see the who, the person who initialed it and said, file this and keep the account open.
Correct. We don't have the documentation for the decision-making process that followed that receipt.
Right.
We can infer the decision was made because the account stayed open for years. But the specific email, the memo, the sign-off sheet authorizing that retention—
it's missing or redacted.
Missing or redacted.
Okay, let's synthesize all of this. We've walked through the jurisdiction, the high-value transfers, the internal knowledge, the settlement. What is the undeniable pattern that emerges from these documents?
The documents establish a clear, repeatable pattern.
Step one.
Epstein and Maxwell established USVI-based entities, Southern Trust, Industrial Integrity, and others.
Step two.
JPMorgan's private bank division serviced these entities, and they did so from 1999 continuously through the 2007 conviction era and beyond. It was a long-term, profitable relationship.
Step three.
The bank possessed documents, specifically the one referencing the non-prosecution deal, which proves they had direct knowledge of the criminal proceedings and the nature of the crimes.
And step four.
High-value transfers, like that $5 million transaction, moved through these accounts using the bank's New York infrastructure under the code JPM-SDNY.
And the settlement, where does that fit into the pattern?
The $75 million settlement creates a closed loop on the liability for these specific patterns.
A closed loop.
Yes. It acknowledges the failure of controls, the institutional failures we referenced at the very beginning, but it does so without providing a full, public accounting of the specific personnel involved.
It monetizes the compliance gap and closes the civil file.
That's a perfect way to put it.
So, to summarize, the link between Hook, Quarters #2, the Southern Trust Company, and the JPM Private Bank is documented.
Undeniably.
The timeline proves the relationship survived the initial criminal conviction.
For years.
And the internal decision-making process, the who, remains the primary gap in the record.
That is the forensic conclusion. The financial infrastructure was there, the institutional knowledge was there, and the money kept moving.
Next time.
The 2024 document releases.
The unsealed lists. It will be a different kind of analysis.
A different kind of paper trail.
You have just heard an analysis of the official record. Every claim, name, and date mentioned in this episode is backed by primary source documents. You can view the original files for yourself at epsteinfiles.fm. If you value this data-first approach to journalism, please leave a 5-star review wherever you're listening right now. It helps keep this investigation visible. We'll see you in the next file.